Welcome to another webinar of Fotis. I'm very happy to see you here, guys. Nelson, Peter, Yamen, if I'm not mistaken, Peter was on the previous webinar as well. Foti, are you here? Can you hear me?
I'm here. I can hear you. Hello, everyone.
Hi.
Good morning.
Hello, Foti. Hi. Good morning. I just made you a co-host. My apologies for the delay, guys. It was basically technical issue from my side, and I couldn't start the webinar earlier. Thank you very much, everyone, for waiting. Fotis, you want to turn your camera on to see you, to say good morning and to start? We're looking forward to it.
I'm having a small issue today with my camera.
I'm having a big issue with the network, actually.
Yes,
as I told you, I'm in Greece right now. No. They do a maintenance
okay,
in the road, on the road, yeah, and they stopped the internet for a while in the most wrong timing ever for me.
I'm afraid if I turn on the camera, this will make the quality when I share my screen to suffer a little bit. So I prefer to have good quality when I share my screen, because I wish to show my indicators, the fundamental indicators, and we should focus on this.
Great. So share your screen.
Absolutely.
We are all taking notes. Again, one more time, apologize for the small delay. So let's start the webinar. Fotis, the stage is yours. Thank you for having you again here with us. Looking forward to hear what you have to say.
Okay, I'm ready. Let me turn on a few things. Okay, hello everyone. Welcome to this webinar by Trading Pit. I'm Fotis Papatheofanous from Fotis Trading Academy. In this webinar, we are going to discuss how to combine technical and fundamental indicators. Because allow me to ask a few things. How long have you been trading? Have you been trading a lot? Maybe 6 months, 1 month, 1 year? Are you using exclusively technical or fundamental indicators? The reason I'm asking is because perhaps you realize, if you have been trading for a while, that focusing on technical indicators alone is not enough. You must understand the narrative. You must understand what is happening on the background, on the fundamentals, if you wish to trade successfully and be profitable. So I'm going to ask you a few questions. Please feel free to participate. Use the chat at the Zoom. Feel free to ask anything as we move forward. I'm going to show you how to combine the technical indicators available in platforms such as MetaTrader and how to read the environment. When I say the environment, I mean the macro environment. How to understand where the next opportunity lies. Because let's face it, imagine you have MetaTrader from any broker, doesn't matter. You have a screen looking like this. If I press F11, you look over here, all the different currency pairs. How do you decide where is the best opportunity? Please feel free to share your thoughts. What are you doing? Do you just, and I think this is the case, do you just look at the charts and you decide, okay, this is what I'm going to do? Do you randomly select which pair to trade? Look how many are there. Look all the different currency pairs. And then you have CFDs, you have indices, metals, cryptos. How do you know where to focus? It all starts with the fundamentals. It takes 3-4 steps maximum, and this will greatly improve your efficiency and your trading plan. So this is not enough. This should be the last step. Step number 1, understand the macro environment. So practically, this is a very practical session. What do? You need to understand bonds. And I'm going to TradingView. 1 second. Where is it? Over here. I have some charts to share with you. Let me remove the ads. Okay, thank you. So what you see here, I'm going to explain later what this orange line is. You see the 2-year US yield. You know what? Let me just get rid of this because it is confusing. Let me show you since the 80s, the 2-year US yield. So this is the yield on the 2-year bonds. What do you notice? You will notice that every time we had a recession, what happens? Every time we have a crisis, concerns in the economy about the future prospects, what is happening? So look over here. This is the dot-com crisis in 2000. Yields moved down. the 2007 crisis, yields moved down. Over here in 2018, towards the end of 2018, we had geopolitical friction, we had geopolitical concerns between US and China. Yields down, we also had in 2019 COVID. And then look at this huge rally from almost zero, we are near 5%. What, and this is a weekly chart. Now, please let me know what you think. Do you think this has an impact in FX? Do you think this is having an impact or no? Just say yes or no, whatever you want, any observation you wish to make. This is why what I'm showing you is very important. Why? Because this is why FX moves. This is what makes currencies move. Currencies do not move randomly. They move because something is happening in the fixed income markets. And it is important to understand what is more likely to happen next. So allow me again to ask this. What do you think it's easier to understand? I'm just going to take Euro Yen, for example. It doesn't matter. It's a random example. Is it easier to predict the direction of this? Let me zoom out. Or understand what is going to happen next with the 2-year yield. I can tell you, because it is a more mature market, it relies more on hardcore fundamentals, on economic indicators. It is easier. I'm not going to say to predict exactly what is going to happen next with the yield, but it is easier to more or less understand the trend and what is more likely to happen. Why? Excuse me. Because we have central banks telling us what is more likely to happen, what they intend to do. The yield is moving also because of certain economic indicators. And I'm going to add a click here. I go to United States, year on year, new price scale. Inflation is affecting the yields. So you see here, the reason we had this big move upwards in the CPI, the US CPI, can you see the correlation with the 2-year yield? So inflation goes up. Everyone was saying this. Everywhere you were looking at the news, you would hear about the very strong, the hot inflation market, and the 2-year yield moves up. What do you think happened with the USD? Is this good? What do you think? Please let me know at the chat. Is this good or bad for the US dollar? So can you see that we have an understanding what the main trend is going to be for the currency? And now I can go over here. What is the date? Roughly the same time we had the peak in the yields, we have the move lower in the Euro USD. And we had a drop, a significant drop. Let me zoom in from roughly 110 towards 1.07. That's 300 pips. And we more or less understand what is likely to happen. Then we have concerns that this is going to stop and it moves to a range and the euro strengthens against the USD and we start all over again. So you need to combine fundamentals together with indicators. So one thing is inflation. Inflation dictates what is more likely to happen with interest rate decisions. What is the outlook now? What is the big trade for the second half of 2023? They are saying that inflation has gone too far. It might move up just a little bit more, but we are reaching a significant point. It will be difficult for inflation to move even higher from here. How do I know? Guys and ladies, everything is available for free on the internet. Over here, we have the 5-year inflation. So this is published by the Fed, the St. Louis Fed, and you can see the expectations for inflation 5 years from now. Let me zoom in. It will look a little bit better. So you can see after the peak, around May, June 22, expectations for inflation 5 years from now have been drifting lower. So inflation is drifting lower. So what do we expect to happen with the 2-year yields? We understand we are approaching perhaps a top. What else do we know about growth? You need to look at inflation and growth. What do we know about growth? So let me go here again. I'm going to show you the real gross domestic GDP for United States. Again, this is from the 50s. We don't need that. Let me zoom in since, let's say, the 90s. You see, after the move higher when the economy reopened due to the COVID, now it is drifting lower and it is only a little bit higher than zero. This is not good for growth. But what happens to an economy that there is not significant growth? It means it is slowing down, and it means potentially that also inflation will slow down. This is why the 5-year inflation looks like this. What about other indicators, other growth indicators regarding the economy? We have new orders. Would you agree that in an economy that does well, there are new orders in the factories that produce anything because there is demand? The economy is growing, the consumer is demanding more and more products. So it means that the factories will have to operate at a faster pace. They will receive new orders. This is not happening. Again, the economy reopened because of COVID. Let me zoom in so you can see. The economy reopened, and what happened after the peak? It is moving down, new orders are coming down, and now it is very close. It's hovering around zero, and we might move to a contraction. And now I'm going to give you one of the best, I'm not going to say secret, but something, let's say, the retail public doesn't really know. We can know what is going to happen next. The ISM PMI, the Institute for Supply Management. So there is this institute in the United States, and they publish an index called the ISM Manufacturing PMI and the Services PMI. And this is happening for every economy, at least in the Western world, even in China. We have this happening in United Kingdom, in Europe, in United States. So this is a survey, and they ask the purchasing managers at factories what is happening. And this is going on every month. Between zero, the index is between 0 and 100. 50 is the middle point. If we move below 50, it means we have contraction. So what are they telling us? The manufacturing PMI in May registered 46.9. The US manufacturing sector shrunk again, losing ground, faster rate of contraction. So what do you think this means for growth? New orders contracted further as panelists remain concerned about when manufacturing growth will resume. They are also telling us the 4 manufacturing industries that have reported growth are only these 4. Things are not going very well. And then we have comments, I'm not going to read this to you, from every single sector, from every single industry in the economy. Do you realize that this is affecting our expectations about the future? So if I go here and I turn on the S&P 500, and imagine you are not a retail trader that has 1,000 or a 2,000 portfolio and you are simply trading your account. What if you are a big hedge fund manager and you have a couple of billion? Would you invest here? Would you invest? What do you think? Let me zoom out. I'm reading all this stuff to you straight from the factory report. Sorry, I apologize for my voice. I have a little bit of a sore throat, but you can see, we see the comments from manufacturing, and manufacturing is shrinking fast. It is below 50. We do not see significant growth. We are expecting that the Fed will raise rates another 50 basis points, but we are close to a top. So what are the trades? Let's now discuss the trades. What do you see happening? When I say the trades, I'm not talking today. I'm not talking in the next hour. What is the medium to longer term trend over here? Let me go to trading view, and now we will clarify this and we will move to FX. So from this, we are expecting inflation very soon to reach a top. This means, or let me get rid of the ads. This means that the yields are also approaching a top. So one of my trades, for example, is to buy 2-year bonds in United States, buy 2-year bonds. I see from the survey in manufacturing that they are not very optimistic about the future. And if rates go up a little bit further, this is not very good for the industry, for equity markets. We have these comments also from other fund managers. They say, watch out, S&P future gains may be much lower than expected. Fed economist says, what moves equities? What is moving equity markets? Is expectations of future gains, expectations about future profitability of the companies, earnings per share. As you can see from the survey that I shared earlier, it doesn't look good. They are expecting that future earnings is going to move lower. Do we see this in the market? Absolutely not. Let me zoom out. We had this big move higher because of COVID, correction, up again. Sorry, there is no way if I was a couple of billion fund manager to go to be very aggressive over here in this area. It is more likely to have a correction, and then I would be looking to release liquidity instead of doing business here. So I have a rather pessimistic outlook, but I'm cautious because if I look at the technical indicators, they are not telling me to sell yet. So I have to decide where I'm doing business. Well, if I'm not buying, I can tell you this, if I'm not buying, where am I selling here? Do I just go ahead and sell here? No. The technical indicators are not telling me that this is, excuse me, a good time yet. What about FX? If yields are moving down, if we are expecting yields to move lower in the United States, what is the trade for the USD? If I look at now at the Euro USD, and if I zoom out a little bit, I see that we are somewhere where we have a confluence of moving coverages. This is not a good area for me to do business because it's kind of 50-50 to go either way. And also I'm not very happy with the traditional indicators that there are available in MetaTrader. So I'm going to move this. I need to be able to define a little bit better the area that I'm going to do business. So I'm going to profile, I'm going to show you something else, market overview, just 1 second until this opens. So these are indicators we use at Fotis Trading Academy. I want to be able to see things a little bit better. This is a 4-hour chart. What do I see here? I see that we are roughly in the middle of the range. If I zoom out, you will see this. Okay, I think I've done too much. Where am I doing business? The trend is down, we are in a range. I'm more or less in the middle of a range. So you see to the upper side, 160 pips, to the downside, close 170 pips. It can go either way. This is not a good area for me to do business. I am rather pessimistic on the USD, but I wouldn't buy the euro here. However, if we move lower in this area, where we have the previous year close, current year close, we are at the bottom of the range, we have a 200 MA, this is close to 1.0710, 720, then potentially I would be looking here to buy the euro against the USD because I think we are approaching the end of the interest rate hike by the Fed in the United States. And I'm expecting growth to slow down. I'm expecting potentially a correction in equities, even if I don't have any technical signals yet. So this is one trade, and I defined the area where I'm going to do business. The other trade, let me tell you about the other big trade, and this is the British pound. What is happening in the world? Please look at the big picture. Let's look at the British pound cable. I think globally we are approaching a level that central banks will stop hiking interest rates. There is inflation, there is persistent inflation, and a couple of them will have to hike a little bit more, between 25 to 50 basis points, but we are reaching a very important point that we will not able to do more hiking because they are seriously hurting growth. The UK economy is in bigger trouble because not only they have very strong inflation, they have lack of growth, they are in a recession, and further hikes will further hurt the economy. If you live in the UK, you know what I mean. I was reading on Financial Times that, sorry, I don't remember right now the exact number, but the article was saying that we had a record number of theft in supermarkets. That means people cannot buy food. So we had a record number of people stealing food from the supermarket. And this is the United Kingdom, okay? It's not some third world country. So I have a pessimistic outlook on the pound against a range of currencies. The question is, where am I doing business? It is easier here. So I have the British pound. I'm not doing business here, but what I'm going to do, let me have a trend line, insert trend line. There is a trend lower on the 4 hour. I'm going to change this to white so you can see this better. So we have a beginning of a trend lower on the 4 hour. Where am I going to try to do business again? Well, if we are going to test the monthly high around this level, 126.70, this is where potentially I will sell my first clip of pound and my stop will be above the current year high. When I move into a position, I'm doing this in clips. So I'm not going to bet the whole farm in this. If I want to sell, let's say, if I want to invest £1,000, I will start with a quarter. I will invest first 250. Then if this is going well, another 250 and so on. So I'm breaking down the trade into 4 clips. So first clip would be here, the other one close to the midline here, perhaps a third clip towards these highs. The stop is above the current year high. I am not averaging in. So what I'm doing is the risk is the same. Let's say I wish to risk 1%. I'm just doing it in clips of 0.25. So I'm having a better position, a better entry. 25 here, 25 here, another 25 there. And I'm holding some bullets from the end with the stop above. And I see we are close to the highs. There is potential to visit the previous monthly lows and the 200 MA. And this is my target. So I have a negative outlook because of the fundamentals against the British pound, but the technicals are dictating where I'm doing business. Overall, do you see what I'm doing? I am not looking at the technicals and randomly saying, oh, okay, what am I going to trade now? No, I'm looking at the fundamentals first, and then I look at the technicals. Another trade, dollar yen. I wish to sell the dollar against the yen. Am I doing this here? No, because this is clearly a strong trend up. I need to wait for the first move lower and then potentially in a retracement, do the business and sell the dollar. So do you see how I combine the fundamentals together with technicals? I'm not saying, oh, this should be a top, let me sell. No, I could be right, but I'm not gambling. This is not a casino, okay? I don't wish to have random odds when it comes to my success. I need to wait for confirmation that the sellers are returning and then decide what to do next. But fundamentally, I'm having a negative outlook on the dollar against the yen. Here is the question, and I need your help. I want you to tell me. So let's have a more interactive session. What about commodity currencies? Aussie, Kiwi, Aussie yen, USD CAD. Let's take the Aussie, for example. So if we have, because of fundamentals, please remember what the fundamentals say. So if we have an environment where potentially we have a correction in equities, slowing growth, what does this mean for the Aussie? Question for you, what is affecting the Australian economy? I'll give you 10 seconds to type this. What is affecting? You can use the chat. What is affecting the Chinese? I said it, sorry. I was going to say the Australian economy and I said the Chinese. Okay, I gave it away. I'm going to ask you another question later. Sorry, let me do the Q&A, move it here. Should go down. Okay, Reinhard said it should go down. Yes. Thank you, Reinhard. And what is affecting the Australian economy? It is the Chinese economy, for one simple reason, that China is one of the biggest importers from Australia, and they are mostly buying commodities, metals, and a few other things, but mostly commodities, metals, and so on. So what do you think will happen if we have globally slowing growth, lower demand? What does this mean for commodities? What does this mean for countries like China that rely on commodities? What does this mean for international commerce? You know, Australia has been avoiding recession for more than 10 years, and this is because of China. If there is trouble in China, there is usually trouble with the Australian dollar, and very often, if not most of the time, it follows what is happening with the Chinese economy, especially lately, the last 5-10 years. So where am I doing business though? Am I just selling here the Aussie because we are thinking we might have risk of, okay, let's sell the Aussie here? No, this is not a good technical area. I am having a negative outlook, but that doesn't mean I'm going to sell over here. What is happening with price action? Where are we right now? Well, we are at the previous monthly open. We are one standard deviation from the mean of the channel. Which means very strong potential. We could have a local bottom here. It doesn't mean it cannot go lower, but I don't think it is the best area to do business. What shall we do? We should wait for a small retracement before we sell. This is what we shall do. Where are we doing business? We are having power fibs here at Fotis Trading Academy. You see, I just press this tool and I'm just clicking on the circles that are selected by the algorithm on the high and the low. And voila, let me zoom in. I know where I'm going to do business. Remember, 4 clips. So first clip is over here, where I have the 38 Fibo, I have the confluence of moving averages. This is one area to sell one clip, 0.25. Second clip over here, 200 MA, current year open, 61 Fibo. It is a good area to do business. Why am I doing this? Why am I selling the dollar, the Aussie dollar? It's not because I only looked at the chart. It is because I'm having a rather pessimistic outlook, but I have to wait for developments also when it comes to technicals. When you trade the Aussie, please remember, you should also pay attention to sentiment. But is there an indicator that will tell you what is happening with sentiment? Yes, and this is equities. So when I look equities doing this at the moment, this is the S&P 500, I am not, let's say, extremely eager. I do not have the strongest conviction to start selling assets, to start selling short. No, I'm cautious. I'm waiting for signs that the sellers are returning, the sellers are becoming more aggressive before I go on and pull the trigger. So I have to wait a little bit. For example, this is the Aussie yen. Yes, of course, I have a rather negative outlook and I wish to sell it, but I'm not doing business here. We have a base just above a moving average. The risk reward is not good for me to sell here. You see, it is all about the reward versus risk. I'm just above the 20-day moving average. I'm not going to sell here. It could bounce technically. It could test the highs again. You must always have in mind the reward versus the risk. If it moves higher and we see signs that equities look like they are losing momentum, then I'm going to pull the trigger. So this is why, this is how we are combining technicals together with fundamentals. Please let me know if you have any questions about what we discussed so far. Any questions at all? Anything you wish to ask about the charts? about the methodology we follow, anything at all, please let me know. Let me go
Great.
here. Oh, go
Yeah.
on. Sorry. Go on,
Sorry,
Alex.
sorry for the interruption. Yeah, on the Q&A, people they can answer the questions, but of course as well we can leave our email addresses as well, just in case of a question that might come afterwards on their mind. They can always email either to me or to you, and we're gonna let them know. Yeah.
This is fantastic. Please feel free
Great.
to send an email.
I'm adding the email right now. My
Yes,
email,
go on.
please do as well. Add your email.
This is fantastic.
Mhm.
So we have a nice question from Reinhard. What are the most important indicators you are using? There are 3 indicators, well, let's say 3 areas, Reinhard, that I'm paying attention. Number 1 is I'm looking at, we have developed a methodology at Fotis Trading Academy called growth, inflation, interest rates, GI square. So we pay attention to what is happening in these 3 areas: growth in the economy, inflation, and interest rates. When it comes to growth, the most important indicator, I'm not going to say GDP, yes, of course it's GDP, but there is one indicator that I particularly like, and this indicator, I'm saying this for everyone, has predicted every single recession in the United States since after the Second World War. And it is this one, the manufacturing PMI, the ISM Purchasing Managers Index, or manufacturing PMI, what I showed you before here, when I was reading the survey from the Purchasing Managers survey, the Purchasing Managers Index. The index is between 0 to 100. So this is from the 50s. They started this since after Second World War. You see, every time we move slightly above 60, in the next 2 to 4 years, we are having a recession and a slowdown in the economy. This also happened lately. Let me zoom in, let me use 5 years. It happened in the heart of the COVID crisis. It went to 65, and since that, economy is slowing down. So I'm using it in different ways for my clients and the portfolios. When we move above 60, I'm becoming a little bit more defensive. I'm paying attention to growth. When we move around the 40 area, I am more optimistic. I'm paying attention to what is likely to happen, and I'm preparing for an upwards move in the economy. So this is where I'm paying attention when it comes to growth. I'm paying attention to the 5-year break-even inflation, because this is telling me what everyone is expecting about inflation, what inflation is going to be in the future. And when it comes to interest rates, we pay great attention to rhetoric, to what central banks are saying and expectations about interest rates. I'm now just briefly describing this. There is a whole methodology that we teach at Fotis Trading Academy, and we explain to our members where they should pay attention and how to use this information then practically in their trading. Tobias says, I have a problem with connection. Will there be a recorded version of this seminar on YouTube or anywhere else? Yes, we are recording this, and you will be able to access this from the start, Tobias. So in our process, to go back to the previous question about the most important indicators, number 1 is fundamentals. Simply understand the narrative. You do not need to be an economist. You do not need to create econometric models. Just understand the narrative and expectations. And then after you do this, you move to the chart. And we are not trying to guess what is going to happen next. You are wasting your time. Don't try to predict what is going to happen next. It is better, and it is easier, and it is liberating you from stress and having to guess what will happen next. It is better to focus on what is the best area to do business. Don't see yourselves as traders, but rather as businessmen or businesswomen. What is the best area to do business? Where is the best reward to risk? So this is how we approach this, and this is how we look at opportunities and areas where to do business. So we might have a view, but we might the economy from a technical point might not be ready yet. but we could be right fundamentally. So we have to wait for the indices for prices to move to the right area. For example, as I told you before, the euro. There is no way I'm going to do business in the middle of the range. You can see the green line, we're in the middle of the range. I'm going to do business lower. I have a positive outlook on the euro. I prefer to buy if we move lower. What about the Aussie? I'm going to sell higher, but not right here. It is a different thing if you trade intraday and you say, look, I'm not interested in the medium to longer term. I'm not looking to take 2 or 3 trades a week. I'm looking to take 2 or 3 trades per day. Then, okay, you can potentially move to 1 hour time frame. And then, of course, technicals become slightly more important. But still, it is extremely useful to be aware of the bigger trend in the economy and what is on everyone's mind. My problem with my outlook, I'll tell you what it is. You must be prepared for different scenarios. My problem is this, it's equities. I look at the economic indicators and they are telling us clearly we are heading towards a recession. We don't know yet whether it's going to be a mild recession or a strong recession. We don't know this. At the moment, we believe it's going to be probably a mild recession. Where are the signs? We don't see this. We do not see in equities signs that the sellers are there, that the sellers are aggressive. And despite all the negative messages from the fundamental side, we do not see we do not see any signs in price action when it comes to equities. So this is why you have to be patient and wait for everything to drop, you know, on the right place. Of course, you know what is happening with equities? This is an index. And if 4 or 5 stocks are doing well, Google, Facebook, Apple, Tesla, so on, this is pulling the index higher. So we can have a situation where most of the stocks are suffering, but because 5, 6 stocks are doing well, the index shows a completely different picture. So we have to be careful, we have to be ready for everything to fall into place. So at the moment overall, let's say I'm very cautious about what is happening. I have a cautious negative outlook, but we must wait for the prices to move in the right area. So again, I'm going to just take a short pause. Please let me know if you have any questions, anything you need to ask about the methodology. But overall, this is how we approach trading, and this is helping you to go ahead and have bigger winners, bigger winning trades. Because if you trade on very small time frames, let's say you might say, well, I'm trading intraday. I'm just going to trade on 5 minutes, 15 minutes, 30 minutes, and so on. Well, yeah, that's good, but you must be right because you are taking more trades. You must be right most of the time. Your reward risk will come lower. I mean, you must look at least 1-to-1, and you are taking more trades. You must be right most of the time. You need to be right 60, 70%. If you move a little bit more to the medium to longer term, and if you pay attention more to swing trades, so you take 3-4 trades per month, you could be right 4 out of 10, 40% of the time, and still make a lot of money because you are going for bigger profits. Instead of going for 10, 20 pips, you are going for 300, 500 pips. And potentially you might be earning the same amount of pips as if you know, when you would trade intraday. So this is what I wanted to share with you today. Please let me know if you have any questions. I'm going to post over here, going to show you Fotis Trading Academy. I'm posting the website. The email is there. So please feel free to send a message. Let me know if we can help you with anything. There you go. If you have any questions, you can also send to Alex at Trading Pit. We are having a very close partnership, and we are looking to prepare traders to succeed in this, get funded, and completely change their life around. We can help you become consistently profitable, pass the challenges, and then use, of course, what Trading Pit is offering to generate consistent income. But you must learn how to trade like a professional. I think this is extremely important for your growth. Okay, please let me know if you have any questions. I don't know, Alex, if you wish to add something.
Actually, no, Fotis, it was indeed a great cover up. I can see that you sent your you sent the link of the Fotis Trading Academy, yeah? Hello?
Sorry, I'm losing again. The connection is not one of the best today.
No worries, I understand. I feel the same. So you did upload the link of your academy,
FotisTradingAcademy.com.
Great.
It's on the chat. Yes.
Great. So the people that can go over to Fotis Trading Academy and find your contact details from there in case they have any questions for you. Yeah.
Excellent. Yes.
Amazing.
Happy to help anyone. Happy to answer. Thank you. We have some comments. Really nice video. Thank you. You are welcome, Reinhard. Thank you so much. Thank you, everyone.
Thank you, everyone from the Trading Pit as well. Thank you, everyone, for being around. We're really looking forward for the next one. Fotis, thank you very much for your time. It was an amazing webinar, up to the point, really helpful, I would say, from the technical aspect and the fundamental as well, because both, I would say, they are equally important. So thank you for the fruitful webinar. Thank you, everybody, for being around. Have a great day ahead and have a good weekend.
Thank you, everyone. Goodbye.
Bye, everyone.